Jitendra Arora joins us, Executive Vice President at ICICI Prudential Life Insurance Company. Jitendra, good afternoon. Thank you for joining us. What do you make of the current market setup? Do you think best part of the gains, both technically and fundamentally, they are behind us, or this rally has a long way to go?
Good afternoon, Nikunj. So again, a lot depends on what horizon are you looking at markets with. So if you are a trader, perhaps, and looking at returns from a 15 days to 30 days perspective, I guess you should take money off the table. But if you're a long-term investor, you believe in the India story, which we definitely do believe in. I guess it's still a very healthy market and an interesting market to stay invested, and perhaps keep deploying money to use in the equity markets for a long-term horizon.
There is a Kotak report which came in the morning and which talks about the margin of the safety for the market is missing, and we are not far away from what could be called as long-term averages. And every time we've gone above the long-term averages, the medium to near-term returns, they get compromised. Would you think that we are reaching that juncture where one needs to be patient and return expectations need to be hunkered down?
So when you're saying that return expectations, again, Nikunj, I'll come back to the horizon over which. So if you think that over next 12 months, perhaps our return expectations need to be anchored down, maybe you are right. But I'm not looking at India as a market to stay invested for, like, let's say, next 12 months only. I believe India's potential is way higher, and I think we can easily be a market which can continue to deliver double-digit returns over a decade and even a couple of decades. So that's the opportunity you are looking at. Now you want to try and time this by buying 4 or 5% lower in next 3 months. Sure, you can try and do that. But come to think about it over a longer period of time, how much difference does it make to your overall return realization? Perhaps nothing.
3% higher is what the Nifty has done. In hindsight, if I look at the Nifty, we may talk about 15% up from the recent low for the Bank Nifty, 10% plus for the Nifty from the recent low. But on a YTD basis, you've just hugged on to a flat line. When Nasdaq's come back, S&P's come back, you are actually not doing exceptionally well in terms of where the market positioning is and where you've actually had the start to the year. You slipped because of high inflation. You slipped because of FI outflows. Thankfully, they become inflows now. Jitendra, what is your view on banks? Some would argue that best of the gains in banks are behind us because NIMs will peak out, credit offtake, the base effect would kick in. Is it a good time to still remain overweight on banks?
We really like large banks as a space, Nikunj, as a house, because we still believe, given our credit to GDP ratio, which still remains fairly low if we compare to a lot of other places, and the opportunity size for banking sector to grow is immense. Yes, you're right that what may happen is that for next 12 months, perhaps NIMs may come off a little bit compared to where they were in terms of an exit in Q4 FY23. But the fact is that this sector, we see it as a compounder over a longer period of time, especially some of the large banks, which are quality franchises, which have a good track record of execution and delivery over a longer of time. And then if I just put valuations on top of it, tell me how many sectors you'll have which will be available to you, which generate ROEs of excess of 16, 17% and still are available to you at PEs, which are around 15 to 20 times on an average in the Indian market.
Is it a good time to be a contra buyer in IT? Nobody likes it. Nobody thinks that the turn is around the corner.
From a 12-month perspective, yes, you should start adding. Though, if you want, you can perhaps wait out the results for this quarter because we are not expecting any kind of significant pickup. And on the margin, we may see some kind of slowdown in the sector as a whole. So given that, you can try and time it over next few months. But yes, as a long-term investor, I'll start nibbling into IT as a sector.
So that's a take coming in as far as some of those sectors are concerned. But Jitendra, what's your take is regarding IT at this point of time?
I just discussed that.
Sorry, I beg your pardon. I was just looking at those Wipro stocks and I got confused with that. But nonetheless, about the real estate vertical, because that's one space which is seeing quite a bit of up move today, whether it's a DLF, Macrotech, etc. Do you think there's a certain pocket of these names which are doing better, or across the board you see a secular trend?
So real estate, what we are witnessing is obviously some of the demand uplift which came post-COVID. And this is still one of the few sectors which remains a very highly unorganized sector. So for the players in the organized sector, there's a huge potential for growth. And I believe that's what attracts some of the long-term investors towards this sector.
The other space, Jitendra, which has really come about is the entire insurance space. Of course, HDFC Life is seeing renewed vigor today. I don't know why. It's an HDFC Group thing ever since the merger date got out. But some of these stocks have made a remarkable recovery from those budget time lows. What is your own sense on whether or not they make for a good investment bet?
So again, I'll refer to the long-term opportunity in the insurance sector. We know that how our sum assured to GDPs are one of the lowest globally. Similarly, insurance premium to GDP is amongst the lower lot, if not the lowest. So from that perspective, the opportunity to grow remains huge for all the insurance players. What happens from time to time is that there is noise with respect to the attractiveness of the sector. And that's what drives short-term behavior. So we've seen that on budget days, some of these stocks were like hammered by 10 to 15%. And again, if you see a stock like HDFC Life had gone to as low as 470, 480 in that move, if I'm not mistaken. From there, it's come back to 680. So that's a very handsome return if you're willing to just stay invested and perhaps even look to time your investing during such times of noise, where perhaps long-term attractiveness of sector doesn't change, but because of a factor which is short-term, you see market getting carried away.
If you were to just take stock of how much these stocks have actually bounced up from those 52-week lows, HDFC's Life is now up almost about 45% odd. LIC also has seen an uptick of about 22%. SBI Life has seen an appreciation of 23%, and these are the 52-week averages that I'm talking about. And ICICI Pru as well has seen a near about 50% appreciation. Of course, we've seen some positive trends in AP growth, steady growth in the for the fiscal is what they have indicated. Tax changes, one can already see that they have had a minuscule impact, and low ticket size products have given high VNB, and that's really aiding some of the renewed vigor on this space. Jiten, and that's pretty much case for pharmaceuticals as well, right? Because I mean, all through last year, there was only one Cipla and DRL, but now look at the recovery coming in and Arora Pharma or, many other, pharmaceutical names. Just wanted to understand what is it that you're making of the recent most developments?
So pharma, what we are gathering in terms on the ground data is obviously massive drug shortages in US across a few SKUs. And I think that's what is driving these stocks, because people expect that this tendency of price correction in the drugs in US will slow down or perhaps halt. And as a result, we will see that the US sales will perhaps start growing much more than what they had expected over the near term. And that's what is sustaining the interest in these stocks. But having said that, some of them also have very good India business. So we definitely like a few of them, given that they have shown steady growth over a period of time. They have continued to deliver double-digit growth in both earnings and top line. So those are also some of the names which we like, because India as a market itself is a good and attractive market for pharmaceuticals.
Okay, so that's about the pharmaceutical space. And Jitendra, before we let you go, how are you looking at playing that entire indigenization, manufacturing, defense theme?
So if you see, we have exposure to quite a few names which are exposed to this trend, wherein you are seeing India emerging as an alternate destination for manufacturing, be it chemicals, be it electronics, be it mobiles. And there are players you can play across the value chain. So we have taken exposures to players which we find attractive given the overall growth and valuation matrix.
Okay, just stay with us. Got another piece of news now to address, and the Adani Group is in focus. They've gone ahead and clarified that they're not aware of any SEC scrutiny. In fact, the clarification comes after reports suggested that the US regulator had sent inquiries to institutional investors on representation made by the conglomerate post-short seller Hindenburg's report. In fact, the company has also clarified that the group companies have acted in accordance to the regulations and accounting standards of the jurisdiction in which they operate. And you can see that recovery actually come by for Adani Group of names yesterday. And today as well, you're not seeing a bad performance for most of those names. Having said that, Adani Ports is a little bit lukewarm. It's down about 0.4% as we speak right now.